Welcome to EnergyRogue.com, the go-to source for the latest insights and analysis on the energy commodities market. Led by two industry veterans, Bill Shanahan and Brian Pieri, as they host their weekly commodity market recap. With over 55 years of combined experience in the energy sector, Bill and Brian bring a wealth of knowledge and expertise to the table. From trading and hedging to finance and optimization, they have seen it all and are here to break down the latest market trends and share their insights. So sit back, relax, and get ready to dive into the world of energy commodities with Bill and Brian on EnergyRogue.com.
Hey, listen, folks, happy Wednesday. Hope you're doing well, no matter which part of the world you're from. Fortunately, we have people from all corners of the world. It's always funny that that's corners, even though it's a sphere. Bill is going to be out of pocket today. He is at a lunch in Oklahoma with the Oklahoma Energy Partners. Or Energy Producers Alliance, I'm sorry, Oklahoma Energy Producers Alliance. So he's going to be out of pocket. So I am just going to cover a little bit about what we wanted to cover today was technical analysis and fundamental analysis. And what I'm going to cover in probably about 20 minutes, I am going to have it open for questions, so feel free to ask. But I'm going to cover in the front part, technical analysis, in the back part, fundamental analysis, and then in the end, what is important to look at when you're looking at forward prices and where to go from there. So we're going to take a look at technical analysis, then fundamental analysis, and then where to go from there. So anyway, sit tight. It's probably going to take about 20 minutes, and I will be fielding questions along the way, so feel free to drop a comment. I will try to address them, but since it's just me and Bill's out of pocket, be patient if I'm a little slow. So first off, let's talk a little bit about, I'm going to save the pitch for a little bit later. Technical analysis. What exactly is technical analysis? Let me blow this up a little bit. So technical analysis actually started in the 17th century with in Asia with Japanese rice traders, and they started utilizing a term and a structure that takes the open, the high, the close, and the low and puts them into a candlestick. So that candlestick, we're not going to go in deep and describe everything on technical analysis today, but the candlestick provides insight into some of the market activities and what might be happening in the market. In addition to that, there are chart patterns, and these are some common ones that I found, and I'm going to be real clear on this. There are hundreds of different technical analysis indicators, and with the advancement of AI, it's gone from 100 to 200 or 300. So there's a lot of different ones, and basically what it's doing is taking the historical price reference and applying mathematical formulations around it, different calculations that project what direction the market may be going in. So here's some common chart patterns that you can Google this, chart patterns, candlesticks. It is something that has taken me 20 years to study. So there are patterns such as a head and shoulders. Right up here, you have inverse head and shoulders, which is actually a bullish formation. So this is intended to be a shoulder. This is intended to be a head, and this is another shoulder. And once it breaks what's called the neckline, it heads up. And then the head and shoulders is a traditional pattern where it's upside down, and basically you got a shoulder, head, a shoulder. We're not going to dive into how to read all of these, but the main point is there's a bullish view and a bearish view. There's double bottom, double top, triple bottom, triple top, ascending triangle, descending triangle. And if you stare at a chart long enough, you will see a lot of different things. And that's one of the reasons that we established Energy Rogue, is to provide a community so that we can share ideas, because some of us have differing opinions, and that's a good thing. It's always good to listen to a lot of good things. This is another website that I found that is a technical indicators list. And there's things like, this is just the top 31 technical indicators. If you look at any charting program, you'll run into probably, I don't know, hundreds. There's hundreds of these. There's moving averages, adaptive moving. I I actually haven't heard of this one before. Average true range, which is a good mathematical one, formulated by Wes Wilder. And that is something that is utilized in multiple technical indicators. There are multiple courses and multiple things that you can do to understand what technical analysis is. And you can search the web and look for the top best trading indicators. But the best place to start, if you don't know anything about technical analysis, is this book. It was written by John Murphy in the 1990s, and it's called Technical Analysis of Financial Markets. This is a good outline of what technical analysis is, both chart patterns and some mathematical formulas, and take it from there. There's another one by Steve Neeson, Japanese candlestick patterns. So that's another one if you want to get educated on that. But the key is, when you look at a pricing chart, you will run into multiple people that have different opinions on what may happen on the market. And there are, let's just pull this up. This is on TradingView. If you go into technicals, I mean, let me blow this up a little bit. Can I blow this up? Yeah. Okay. So let's just scroll down through. Look at how many there are. There are, well, they actually have it stripped down. So they probably have about 60 or 70 here, but there are a lot of different ones. And for anybody getting started in technical analysis, pardon me, I got some congestion. For anybody getting started in technical analysis, hit me up. There's information down below because I have studied this. And the key that I look at is, I look at no more than 3 different indicators. I pick my favorites and I stick with them. But what I wanted to show you is, this is just a picture of the S&P 500. And what we're looking at here is the price from early January to today, this on a 1-hour basis. So if you take a look, I chose a Fibonacci retracement. So you go from the low to the high, and what you can see is that from the low to the high, you can see areas that stand out, like this one. It tested, and that is right at the 50% level. And there's one at the 61.8 where you can see levels of support and resistance. And that's that's the power of technical analysis. Now, it's easy to look at now, but it's hard to look at if you're sitting at January 24th. Because if you're sitting at January 24th, I mean, let's just move this here. You might look at things and go, well, it looks like we're just going to continue down. So it's a lot of times easy to look in the rear view mirror as opposed to ahead. And there are multiple courses out there. Our friend James over at Arcus FX, I think he's creating a course on this. But my main point is, you can look at chart patterns, you can look at different things, and there are technical traders that make a lot of money. James at Arcus FX is one of them. So anyhow, what I typically look at, let me look at crude oil and natural gas. because that's what we stay on. We have a platform, and I'll introduce that in a minute, but we have a platform where we analyze and assess what's happening in the technical markets, what's happening in the fundamental markets, so that you can be equipped on the energy markets as a whole. So when we look at natural gas, let me just take this one out of context, or not out of context, but what you can see is this is a 1 hour chart right up here, natural gas, and we dropped on Monday. And for anybody following natural gas, we dropped and we did recover. And this is something, this is part of the reason that in our community, I send out videos as often as I can, or for specific questions. Like this is from for Igor, for Daniel, for Mark. So what I look at are price levels that are support or resistance, and I usually look at these from a historical basis. So you can see levels like this are important, and levels like this are important. You can see stops and starts at these levels, and I typically look at MACD, or moving average convergence divergence. So that's typically what I look at. But what I look at in the energy markets, so in the energy markets as particular, I look at the fundamentals. So technicals will drive the short term of the market, and technicals, and for natural gas, weather. For crude oil, it's more financial events. On the fundamentals, that is going to be the slower moving, bigger question. And that is going to come down to production, demand, weather, storage, economic events, all that type of activity. So, what we do at Energy Rogue is we have a dashboard that we provide in our service, and we take a look at what is happening. Let's just take a look at natural gas, and I'll say this a little slow. There it is. Natural gas on the financial side. So we look at physical prices, what's happening in the forward market, what may be happening on that particular day. So we target moving averages, MACD, pivot levels. We look at these every day, and resistance RSI, as well as Bollinger Bands. So that's sorry about that. That's what we look at, is we try and bring this all together and really only keep it restricted to a few indicators and provide that in our platform. And then at the end of the week, what we do is we recap all the fundamentals, everything that happened during the week, into a video, as well as consolidate on this page what the technical summary of the market is, and where TradingView believes the technical analysis will go, as well as what the forward market has. And then this is the part that I want to point to. This is the part that I want to get to. Fundamentals will drive the longer term. For example, in natural gas last year, let's just take a look at it. Let me blow this up. Let's look at a week, because that's going to be easier to go back. Okay. So when we look at last year, for anybody that was following natural gas, we were up around $9. The fundamentals in the United States did not support that. So our members were getting videos like these, that were saying the fundamentals do not support these levels. Conversely, my opinion, fundamentals do not support these levels. So if you want to find out what those levels are, you can subscribe and join. It's only $89 a month for the platform. If you want to get access to Bill and Brian, that is $179. And there are links down below if you're interested in signing up. So, and on that note, if you're interested, here's a few quotes from our customers. What made it so effective for Energy Rogue's ability to break down complex topics with supporting reasons that made it easy to understand. We've grown towards more data-driven investments and can supply our clients with more up-to-date relevant information. No longer need to spend valuable time searching the internet for other sources for accurate, up-to-date oil and gas information. Sign up now. There's no better options out there. Thank you. Trust me, we've looked. Um, Try it. See how quickly you become addicted to the information supply in plain language on how and why they view price movements. If you're on the fence about working with Energy Rogue, I'd say regardless of your industry experience with Bill and Brian behind the wheel, this is a game changer, 10 out of 10. And you actually listen to me instead of trying to sell me a solution. Of course, I'm selling right now. Very rare in today's world. Do it, you won't regret it. So we would love to have you in our community. Commercial is going to be over now, so we're going to get back to the basics. And what I was going to cover here is when you look at the longer vision of where prices are, and I'm sorry, my chart is a little bit busy, but what we look at on a daily frequency, a weekly frequency, a monthly frequency, seasonal frequency, we look at where the market is and we take a look at our platform and take a look at supply and demand, and we look at trends that are happening. All our charts are interactive. Trends that are happening, for example, this past week, we dropped significantly. And for anybody that wasn't watching on natural gas, that is because of the extreme cold that we had that is going to drive injections for tomorrow. So let me take a quick sip. So feel free to ask questions. I'll be happy to get back to them, or drop me a comment of anything you'd like to see, understand. And if you're watching this after the fact, reach out, connect. There's information down below. So what we try to dissect, and for example, in our Discord community, which is very phenomenal, we were discussing how much new production, how much of this production is going down as a result of weather, and how much of this is going down because of declines. So what we also track and what we take a look at is we take a look at the net change in the shale basins and the net change of how much natural gas is projecting to decline. And we take a look at that because we break apart new production and the base decline. So, for example, in the United States right now, we produce anywhere from, well, currently 95. I think production has ticked back up above 102, but every month we decline 3 BCF a day. So roughly 3% or 2.5% disappears unless we have new production. And what we do is we actually take a look at where that new production is coming from, because that gives us insight on what may be happening in the future. So that's what we try to assimilate and put together in our dashboard, which includes supply, demand, balance, storage, stocks, and we also cover, it's not on this page, but right here, this with our video and technicals and fundamentals, and then some visuals on the fundamentals. All our charts are interactive. You can take a look at that and see what demand supply is looking like. We also take a look at weather for degree days, what's coming in the near term, the 6 to 10, 8 to 14, 3 to 4. So, and then what we also do is, for example, in our Discord channel, we had a question about Peter Zion on geopolitics and what that means for natural gas. This is actually a very interesting question, and one of our customers is asking me for a update for his corporate presentation this next week, and we're going to touch on Saudi Arabia for him because crude oil is of influence. What Peter Zion is talking about in this video was about the impacts and changes in the global natural gas supply and demand complex because of Russia. So he asked, can I give comments on that? So I gave him my thoughts, gave him my comments, and ultimately he appreciated the response. This is what we do to try and help elevate the conversation. And one of our other customers was projecting. I put potential directions in here. This obviously was natural gas. And I was picking path A, which was taking it from 241 to 253. And I'm leaning path A. That was 2 days ago. So this was on Monday. And earlier that day, I had a video where I outlined that. So we would love to see you inside. Rogue Edge is $89 a month. If you want the interaction with some of our questions and answers and ability to book meetings, that is $179. It's currently called Rogue Premium. We're probably going to come up with a different name. If you have any different ideas, let me know. So listen, I'm going to open it up for questions, but essentially my main point is when you look at energy markets in particular, it's important. Let me take this back to the daily chart and let's go back. Oh, no, right there. Let me go back here and spread this out so that we can have a clearer picture of what might be coming. And this morning I posted in our Discord group that I was expecting, or actually earlier this week, I said I expected this gap to close and a potential continuation up. So that's what we try to take a look at. So let's see. Great question from Curtis Smith. Do people who buy futures have a way to deliver to the market? Curtis, that is a phenomenal question. So I'm actually going to take a history lesson here. And the history lesson, anybody who has followed crude oil markets, this is a continuous futures contract. Let's go back to 2020. So, and I want to get the visual before I go into that. This is where we were. And what you can see is this is during 2020. This is during COVID. So we were trading around $19 to $29. And then what happened, there was one day, what day was this? April 20th of 2020. You can see this red line actually went negative. It went all the way down to negative $40.32. The reason it went negative is with the way US based WTI and Henry Hub on the natural gas and crude oil futures works is if you have bought a contract or sold a contract and you haven't closed that position by expiration day, you have to deliver. And what happened on this particular day, that was crude oil settlement day. And there was a small amount of players that did not, there was a volume spike, but that was earlier in the day. There was a small amount of contracts relative to trading volume that was left and had to deliver volumes because they had bought, so they had to sell. So they had to show up with molecules and find a buyer. And what happened was there were only 3 or 4 different players that had the ability to actually take those barrels. So the price went from 29. They said, how about $10? No, $5, 0, -5, -10, because they had to close their position. So the US NYMEX or New York Mercantile Exchange has that mechanism. There are different exchanges, such as Brent settles financially. So you will not have this kind of dynamic. So, but if you are buying or selling a futures contract as an individual investor or a company, um, there's particular financial instruments that you can use to avoid a circumstance like this. And there's a way to utilize that for your hedging for your company, because I believe, Curtis, if memory serves, I believe you're in the industry. So if you want to have a session, there is a link down below. Feel free to book a meeting. Be happy to talk to you about that. So, so listen, there's a follow-up. So who do they get the crude from if they don't have the pipeline or production outlet? They have to buy it from somebody who has that pipeline or production. So if they need to buy it or sell it or deliver the day that I'm talking about, the people that had to close those contracts, the people that had to close those contracts did not have the physical capability. So they had to find 3 counterparties that were trading futures and had the ability to take it. So good. I'm glad that answered your question. So I am going to keep it open for about 4 more minutes. But the key message that I really want to point out here is many folks. Let me just go back to normal here. Got to get back to 2020. We're now in 2024. How about that? Um, so, um, so when we're looking at technical charts, and if you are trading physical, or not physical, if you're trading financially, this is not financial advice. I'm not an investment advisor. It's important for you to get educated on what your risks are. Sorry, my congestion's acting up. What your risks are, what your tolerance is, and please have risk management built into your system. So again, not a financial advisor. If you want to read the disclaimers down below, be happy to walk you through that. So where I see the market, and this is a subjective opinion, is that the fundamentals will guide the longer term. Technicals will drive the shorter term. And in between is where they meet. So I have a particular bias on natural gas and a bias on crude oil, and that is based upon my supply view and my demand view, as well as storage. So that's how I dissect the market. I start with fundamentals, and you don't have to subscribe to Energy Rogue. We provided this because we were spending way too much time going everywhere. So we established a company that wanted to make it not cost prohibitive. So if you need to know this, if you're in the energy business or you're trading the energy business, you don't have to come and subscribe to us, but be educated on what the fundamentals show and what the technicals show. And if you do not understand the fundamentals, you can come and join $179 a month, and we have education, ongoing education in our Discord, and we constantly answer questions out here, such as I'm trying to understand the market. And listen, do it. You won't regret it. So that's what I've got. I appreciate your time today. If you have any questions, let me know. Let's see, Curtis has one more. So if you have physical products, I still have to go through another company pipeline to get to a refinery. So how can I avoid these costs? Curtis, I'd recommend that you reach out with me and book an appointment, because I I have specific insight. We do have some insight that we can provide to you because it's going to be very specific to where the physical product is and where you're trying to go. And to get to the refinery, that's not the same place as Cushing for the NYMEX contract. So if you're available, book a meeting, be happy to talk to you and kind of help isolate that. So hopefully that gets you where you need to go. Um, Listen, thanks so much. Really appreciate you spending some time with me on Wednesday, especially since I've got some congestion. So, listen, if you found this interesting or amusing or funny, and since Bill in here, he didn't get to razz me on technobabble. So I do a lot of technical analysis, and both of us do a lot of fundamental analysis so that we can provide something for our community, which is currently building and growing. And listen, if you're serious about understanding the energy markets, you need to get an understanding on the fundamentals as well as the technicals. So listen, thanks so much. Greatly appreciated. And I hope, Curtis, I will send you a message on LinkedIn. So I will send you a message and we'll get that booked. So listen, thanks so much. Really appreciate you. If you have anything, reach out to me. There are links down below. So have a great day.